Hi all, I'm Dave Lamurray from Huggable Home Loans. I've worked with the Stockland crew here since 2009 and it's been an absolute pleasure. The steps for the finance approval are different for everybody. First of all, ideally you've perhaps found your land and started engaging a builder. But if you're lucky enough to have perhaps met with a finance person in advance, you can shop with a bit more confidence. Often the best path is to start with a pre-approval. That way you know how much you can spend and you can do it with a bit more surety. So the full application process can take from start to finish around 30 days. Once we've compiled all the information, we can then submit it to a bank. Now, a lot of the time taken to submit an application is actually in the compiling of the info. The more precise you can be with bringing that to your finance person will help the whole process be a lot smoother for everybody. When banks look at your overall circumstance, there's really two things they're looking for: serviceability and security. Security is to do with things such as the 5% deposit. When it comes to serviceability, they're looking at your income, less your expenses, to work out how much they can lend you, the big number. The banks will want to look at what your cost of living is. Now that can include even looking into your savings history over time. As one of the requirements for banks, but generally speaking, they'll need at least 5% deposit. But there are some other means that banks can use to help cover the 5% genuine savings requirement. If you have a good rental history and you rent through a real estate agent, a few banks will actually factor in the rental rule. No need necessarily to have that 5% held for the usual 3 months. When it comes to serviceability, other than obviously your income, they also look into your general cost of living. So that is what it costs to run your household. Now for a first homeowner, that may be a bit of an estimate, but maybe you've rented, so you have a bit of a gauge as to that. Now it's best and it's realistic for you not to doctor that or coach yourself to not spend realistically, but the banks will look at this, so you do need to be mindful of how much you're spending leading up to your application. So there are some incentives and assistance that you can get from a governmental perspective to get you into your first home. Most people would have heard of the First Homeowners Grant, that's the $15,000. Again, there are some restrictions as far as house and land total, but for the most part, that is something that first homeowners can take on. Currently, there is one for regional areas, the Regional First Home Buyers Guarantee, which helps Townsvillites, let's say, get into their home without having to pay as much in the way of fees. When looking to proceed with the application, you've got to decide whether you're going to go to a bank or to a broker. You want to know that they have worked with construction loans before. A broker can look across your particular financial circumstance and decide what's right for you and go to that particular lender. We are able to offer you exactly the same loan as if you walked into that bank yourself. The real benefit, I believe, is not that we don't cost you anything. It's more that we can be your one point of contact for as long as you want us. Our job doesn't just stop when your land settles or your loan draws. We help hold your hand through that whole process and make sure that at the end you have a beautiful handover of your new home. There are still ways for you to access equity within your existing property. If you've got a home that's worth X and you've got this much owing, you can access some of that equity to use as your deposit. When constructing a home, there's normally 5 stages: base, frame, enclosed, fixing, and final. We help you through those stages. Another way with the construction process, and it helps with the banks and the funding process for them, but they also only charge interest only during the build. Now the idea of that is that you're not paying the full repayment over the whole period, you're only paying it as the money is drawn. So at each stage, you're only paying the interest component of the stages as they grow. And what that means is that you don't have to manage the repayments to a rental for that whole period, as well as a full repayment for a build. It just helps ease that. So if you are looking at land and build, I would love to help out. I work with the team here at North Shore. I'm sure they can get in contact with me anytime. I'd love to chat.